Welcome to this explainer. Today, we're unpacking a massive paradigm shift happening right now in the Forex SaaS industry. We're looking at a pretty frustrating disconnect, the massive gap between having the absolute best technology on the market and actually getting brokers to buy it. If you're operating in this space, building tech for financial professionals or trying to scale a platform, this directly impacts your bottom line. We're going to break down the absolutely crucial difference between being just another software vendor and becoming the definitive go-to platform that brokers naturally choose.
So, here's the multi-million-dollar question we have to ask. Why do brokers completely ignore superior SaaS platforms? I mean, you see it all the time, right? A company spends years developing this incredible, cutting-edge tech, but the market responds with absolute crickets. Well, the harsh reality is that most white-label SaaS companies in the Forex space kind of look exactly the same to the buyer. It's literally like staring at a massive wall of identical TVs in an electronics store. They all have the same dashboards, the same feature lists, and the exact same promises of speed and reliability. And when everything looks identical, a pattern interrupt happens in the buyer's mind. Brokers just stop comparing the actual technology. They stop looking at the product entirely, and instead they start choosing the brands they actually recognize. Visibility is suddenly trumping features.
That brings us to Section 1, the sea of sameness.
Rapid commoditization has turned the market into an absolute blur. Seriously, if a broker puts 10 different trading platforms side by side today, the user interfaces are practically indistinguishable. The charts, the tools, the color schemes, they all just blend into one generic sea of software. Think about a startup that recently spent, say, $2 million building a lightning-fast matching engine, only to lose a major brokerage deal to an older, legacy platform. Why? Simply because that legacy platform had a widely recognized logo. Because the core features are virtually identical across the board now, brokers naturally gravitate toward those recognizable brands. When the software itself doesn't stand out, a strong brand identity is kind of the only true differentiator you have left.
Okay, let's dive into Section 2, the visibility trap.
Here's where the core problem really begins to agitate tech-first businesses. Technology is simply easier to buy and deploy than ever before. White-label platforms are launching at record speeds. You no longer need 5 years and an army of developers to build a trading engine from scratch. And because of this, the feature gaps between the absolute top-tier provider and the newest startup on the block are shrinking rapidly. Having a good product is no longer the protective moat it used to be. If your entire picture lies on having a slightly faster execution speed or a marginally cleaner UI, well, your competitive advantage is evaporating as we speak.
This leads us to a really painful reality, the invisible brand. What is that? It's a generic-looking SaaS company that brokers perceive as inherently risky, purely due to a total lack of market recognition. If your brand looks generic, you become invisible. And in the financial world, invisible equals risky. If a broker has never heard of you, never seen you in the media, and never seen you discussed by their peers, there's no way they are going to trust you with their critical business infrastructure. It genuinely doesn't matter how flawless your code is. Generic simply equals forgettable.
And this brilliantly illustrates the trap. Generic SaaS brands tend to max out all their resources on development, adding tool after tool, widget after widget, which results in an incredibly high feature count. But because they lack any real authority, their market attention totally flatlines. It's like pouring water into a leaky bucket, hoping the sheer volume of features will somehow magically generate industry buzz. Spoiler alert, it doesn't.
Let's pivot to Section 3, trust drives broker decisions.
We need to completely flip our mindset here, from technology first to trust first. Why? Because trust influences every single buying decision in finance, period. This matters to you because, especially in the Forex industry, visibility creates perceived stability. When people see you everywhere, they naturally assume you're solid, well-funded, and reliable. That perceived stability directly creates trust. As we've seen, brokers don't always choose the most advanced platform. They choose the platform that feels established. They choose the one they keep seeing in their news feeds. They choose the one that feels safe.
Companies generally take one of two paths in this space. A product focus means pouring all your energy into more features, better UI, and more tools. Now this is where most Forex SaaS companies live. But a true authority focus means prioritizing media presence, deliberate brand positioning, and widespread industry visibility. Look, when you ignore authority, even fundamentally great products are going to struggle to grow, because a good product does not automatically equal a trusted brand. Beautiful, highly functional software fails every single day simply because nobody knows it exists.
All right, let's move on to Section 4, the PR growth engine.
So how do we actually build that authority?
This is where public relations entirely changes the game. It's the hidden growth lever used by your dominating competitors, and it operates as a very systematic pipeline. Let's see how this builds. First, PR keeps your brand continuously visible through press releases, media logos, and coverage. Second, that continuous visibility builds recognition in the mind of the broker. Third, over time, that recognition transforms into deep trust. And finally, that trust directly translates into actual SaaS revenue growth. It's a direct, measurable path from getting your name out there to actually closing enterprise deals.
Because at the end of the day, brokers remember the brands they constantly see. They need to see you across top-tier media publications. They need to see you dominating search results when they're researching solutions. And they need to see you actively being discussed across the industry. This ubiquitous, multi-channel approach is absolutely crucial. It ensures that when a broker is finally ready to upgrade their platform, your SaaS brand is the very first one that pops into their head.
Finally, Section 5, winning in 2026.
So, how do you future-proof your business in this rapidly commoditizing market? This really hits the nail on the head. The Forex SaaS brands winning in 2026 won't just have good technology, they'll have strong market visibility. Think about that for a second. Good technology is simply the entry fee now. It's just the bare minimum required to sit at the table. Long-term authority, driven by consistent visibility, is literally the only way you can climb out of that sea of sameness and establish true market dominance.
In crowded markets, recognition becomes your absolute advantage. PR equals long-term visibility, and visibility drives growth. So I want you to ask yourself today to really evaluate your own business. What is your product to PR ratio? Are you spending 99% of your energy building features that just blend in, and only 1% building the authority that makes you stand out? It's time to build a SaaS brand that brokers already recognize before they even jump on a demo with you. Thank you so much for joining me for this explainer, and I really hope this helps you rethink the strategies that will build your long-term authority.